things off here tonight with BTC. At that trend line before it actually continued lower. But that, in fact, we might even be able to replicate this here. Let me go ahead and draw this in. We have that trend line support and then that break. So what I think is going on here is this is heading down towards support. Similarly, over here, currently today, we got that breakdown there, and now we're heading down towards this level of support. So that's kind of what it looks like to me. I think that Bitcoin probably has another, how many percent, an additional 20% to the downside, maybe $58,000 for Bitcoin is where I'll start buying, but not today. So BTC, even if it bounces, it's still a sell, I think, especially in light of Google's earnings today. Google, I thought, was going to support the market and ended up not rallying on the back of a good report because of all the capex. So there's quite a bit of fear out there that too much capital is being spent with too little return. Now, as we move on over here to Ethereum, here's ETH. Notice that level of support right there. So I'm going to go ahead and mark that with an arrow. Yesterday and today, ETH until $1,600 or so. And that would be, kind of what happened last cycle too. When we got the breakdown here, same level actually. Anyone who's been holding ETH since May of 2022 is breaking even right now. Wow. So, but last bear market, ETH moved from 2,200, something like that, all the way down another 60% to the downside. So, could ETH break by another 60% this cycle? Well, if it does, then that would bring ETH all the way down to, what is that, 888, 900? Something sticking out. That's down there. But maybe, look, we've got the double top. We've got this level of support that broke. maybe the best level to be buying. I don't know if we're going to get an opportunity to buy ETH at $900, but if we do much, it can be difficult. Absolutely. Here's Sol. Let's take a look at Solana. This is an interesting one. So Solana, we've been talking about, breaking down finally, and see this trend line's jumping out at me now. Let me go ahead and draw this in. So right, something like that. You see that? We got a bunch of different tests right here and right here at what was that? At $110. The next test at $96. And the first level, I think I want to anchor it to is 117. In fact, I could even drag it over here like that. And that actually seems to make some sense. So that's anchored to the $128 highs from the beginning of the bull market in Solana. And it just marks every consecutive lower low. In fact, let me go ahead and circle these. There's a low, there's the next lower low and lower low. And so now Solana is just kind of in this little region here where maybe it's $77 or $75 or something like that. It finds some support and bounces for a little while. But now that Solana is underneath $95, I think that it probably moves to $75, in a hurry potentially. But I think better support for Solana is all the way down here at $35 or $40, something like that. So that would mark, if Solana is able to get down here to $33, that would be another 60% on the downside. So if ETH is able to move down, let's say from 21 to 16, that's 26%. And over here on Bitcoin, we know that from the current price down to 58K is around 20%. That makes sense, right? You're going down this different levels of volatility have different expected moves. So the lowest level of volatility is Bitcoin. So you expect maybe another 20% on the downside. The next higher level of volatility is ETH. So maybe you expect something closer to 25 or 30% on the downside. And then after you get outside of ETH, literally anything outside of ETH, then the volatility becomes much, much greater. So Solana, maybe you expect 60% on the downside. And then once we start making our way into much more volatile altcoins, then the volatility just goes straight up. So something like XRP, I think that XRP probably just moves on down by another 60%, even from where it currently is, at $1.50. I think it finds support at maybe 65 cents. So that's 60% to the downside out of XRP. And we can see this clearly. It's just accelerating lower. Now, let me give you guys something that might be useful for you. Whenever you are viewing a chart like this, sometimes it's valuable to invert the scale. So if I was to invert the scale here, what would this chart tell you? This is simply an inverted price chart of XRP. And, I can tell you, for me, this looks like this thing just breaks out and keeps running higher, right? Isn't that what this looks like? Except that moving up and to the right here means crashing, essentially. So there's no support until XRP gets to 60 cents. Unfortunately, that's where the support is. So I think that's where we should expect XRP to move to over the next, several weeks, several months. This is a bear market, don't you know? So we should expect any rally to be a selling opportunity. Now, where would those rallies potentially stop? And this is very clear. So if there's a rally out of XRP, the first level where I would expect it to find resistance would be $1.76. But if this continues to move over the next several months, then I'm just going to watch. I'm going to watch this trend line here. So that will be the trend line resistance for any bear market rallies, which can be very steep and very sharp, violent. They call them face rippers. And you can see it right here. So that move, this move was like 3 sessions, 30% in 3 sessions. So those bear market rallies can be violent. You got to watch out for those. And that's why you don't use any leverage. You don't need to use any leverage because this move, all you got to do is stay short and manage your funding. So, minus 60% does not require that you use any leverage at all. All it requires is patience and the ability to hold a position with some conviction. So that's what I'm doing. And let's move on to from XRP. Let's move on to SUI, and let's not invert the scale here on SUI. All right. So what do we see? Well, we've been talking about this level of support, and now that it's broken and confirmed lower, there really isn't any support here in SUI until at least 50 cents. I'll be a buyer at 50 cents, but I would much rather be a buyer at 35 cents, basically the all-time lows for SUI. But I'll start buying it at 50 cents and just stack it away spot, because I actually think SUI is a great chain. It really is. And hey, if I buy at 50 cents, if my cost basis is like, let's say 40 cents down here on some SUI, and during the next bull run, it gets up to $5 again, hey, that is a pretty great trade. That's a 10x over the course of a couple of years. So I'll make that trade. I'll make that trade. But right now I'm short, and I'm just waiting for SUI to basically just capitulate all the way down to 50 cents. And I think that is an easy hold, a really easy hold right now. So there really isn't much by way of support here in SUI. Let's take a look at Link. And by the way, the percentage moves that we're talking about here, you don't need to use any leverage. So this is, a 50% move, even from these low prices. Imagine if you had been able to, get short all the way up at $5 or something like that. But these percentage gains we're talking about, 60% is nothing to shake a stick at. And if you use like 1.5x at leverage, very, very small amount of leverage, all of a sudden you can get pretty close to like 80%. You could double your money over the course of a couple of weeks just by using a small amount of leverage and not using too much leverage. Because when there is a bear market rally, you don't want to get shaken out. So if you use like more than 1.5x leverage, that's not recommended. Okay. There are a lot of people who like to trade with 5, 10, 20x leverage, 50 sometimes. I was one of them at one point, but I think that it's much, much safer and much easier to manage positions with less leverage. So, think anything less than 2x leverage. 2x leverage would be pushing it. That would be pushing it. So let's take a look at Link. Here's Link. And, same pattern here on Link. So it's got this interesting channel, this channel that it was range bound in for the majority of last bear market. And notice when Link broke down into this channel last bear cycle, it really fell through to the bottom of the channel almost immediately. And so that was a sharp move. That was a 40% move. And it looks like that move took place. That was May 2022. It looks like that move took place over the course of 1, 2, 3, 4 days. So over the course of 4 days, Link down by 40%. And then that was it. So if you missed the move on the downside, maybe you could have gotten short here, but it basically moved sideways for the rest of the bear market, which lasted for about a year. So, now that Link has broken back down into this channel, that's basically what I'm playing for. I think that it could just, see the bottom fall out and move back down towards the bottom of this channel here. So I'll basically just close my shorts at like $6.40 on Link, something like that. That would be, probably above the bottom, but it's so volatile. Link, and once you get into altcoins like this, the volatility is just so extreme that I would be very, very happy to book a, what is that in percentage terms? From the current price down 30%. I would be very happy to book that 30%. But here's the thing though, if Bitcoin actually moves to 58K and Solana to 30, then Link, there's no way Link, stays above like $5. So closing that trade at $6 would definitely be a mistake if it continues to the downside. And if we look not at last cycle, but Link is one of the oldest coins in crypto. If we go back all the way to like 2019 here, this parabola that Link put in. This is where a lot of people, first became enamored with Link. So this big move here, oh my goodness, look at that parabola. So that's from 2019 into, what is that, spring 2019? So this move here, Link did an 8x. And so, but look at the price though. It's the bottom of that channel, $4.55. That's where it found resistance, the bottom of the channel. So I don't know, will Link revisit $5 or so? Maybe. I mean, look, it definitely could. It definitely could. There's no reason to think that it wouldn't. It could. But let me just go ahead and bring this back into view here so we can take a look at today's action. I don't know, $4.55, prices from 2019 certainly seems possible, especially if I think $30 Sol is possible. Why isn't $5 Link possible? It certainly is. So yeah, and that could happen fast if it's going to happen, just like it did last cycle. So I got a short open on Link, and maybe I don't close the position at 6 after all. So let's see here. What are we looking at next? How about gold and silver? Here's gold. Now I'm running this really interesting, essentially like a basis trade on gold. I can share that with anyone. You just join the School community. It's totally free. I post content in there. And the trade that I'm in right now is doing between 100 and 200%, depending on what the funding rate is and the short perps on gold. It's completely delta neutral. It's just a CLP plus a short position over on GMX. That together with the CLP doing like 50% and the short perps doing between 50 and 150%. I mean, yeah, it's doing really, really well. But what it needs is volatility. So it needs all of this volatility out of gold so that there's more swap volume and there's more pressure driving the price up. That's what that trade needs. And so when I take a look at this pattern here, I mean, gold to me looks a little bit better than silver does. But at the same time, this has been a parabola, a big, big parabola. So could it be time for a bit of a retracement? I think so, but only if the dollar doesn't really continue weakening. Gold above 5,000 is great, but if the dollar continues to weaken, then, gold could go much, much, much higher. So here's DXY, but the dollar has, gotten back up above resistance. So you see right here, this level of long-term, what was support, it failed and became resistance, but the dollar has been able to get back up above that level of resistance there. So if we just go ahead and zoom out on the dollar here, you get a little bit more perspective. So it might even be better to zoom out to a weekly. There we go. Let me imbibe some spirits on the weekly time frame here. Check this out. This is supporting the dollar all the way back in 2011 and connected to the next higher low, extend to the right, and this is where we're trading now. So this is long-term trend line support. And on the weekly, these big wicks. Take a look at these big wicks here. Not John Wick. These are just candlestick wicks. And so check this out. Big wick. That tends to mark a lot of buying pressure or some type of a bottoming tail. So these can sometimes be referred to as bottoming tails. But anyway, it looks as though the dollar could actually push a little bit higher here. And if the dollar is able to get back up above 99.5, well, then that would mean that this false breakout in the euro continues all the way down to $1.15. So that certainly seems to be where things are heading now. It looks like it was just a false breakdown in the dollar. So if we get a false breakdown in the dollar, that means that gold may have seen its highs for a while. And so take a look again at gold, but this time on a weekly. What do you see that's different? Notice we got the topping tail and the bottoming tail. And the candle bodies here are about the same size. So we don't have any real engulfing. So this is indecision. That's what this is. But with a bullish bias, no doubt. So gold probably just continues pushing higher. And the dollar probably just continues to weaken over a long enough period of time. But if gold were to turn around and start moving lower, I would expect 4,400 to be the first level of support. I would expect 3,800 to be the next level of support. And hey, if it fails 38, then it's probably going back down to 28. So, that would be a minus 50% or something like that for gold, 45%. So that could certainly happen. It's not outside of the realm of possibility for that to happen. I don't think it's likely, though. I think that gold is probably seeing some type of repricing, some type of structural repricing. And I think that it probably continues. But it's just not likely that this parabola continues. Because if it does, then we'd be seeing, you should probably expect $7,000 gold this year. And I just don't see how that is possible unless the dollar just loses a significant amount of its purchasing power this year. And yet inflation doesn't seem to be really picking back up that quickly. So yeah, I don't know. It doesn't seem likely that gold continues ripping like this. Let's take a look at silver. Here's silver. And let's go ahead and zoom out. Wow. What a chart. It always blows me away every time I see a chart like this. And so this is a interesting little hammer candle on the weekly that we've got forming so far in silver. And these big gaps here, those gaps all filled. So the gaps are filled, and it's tough to say one way or another. If I had to choose, I would choose downside in silver. Down to 50 something, maybe 55. I think that if you zoom into the daily, you can see that double top a little bit more clearly here. So something like this, 55. So that would make sense for me in silver, but from where it is, it's a 40% move to the downside. So, can that happen? Of course it can. That would be a great trade if you don't use any leverage, just to be short silver. So you could do the same thing in gold. Short gold down to 3,800, or at least down to 4,400. Short gold down to 44. I'm short gold right now, so maybe I'm talking my book. But I think gold down to 44 makes sense, and silver down to $54 makes sense to me. So let's take a look here at copper. So copper has this kind of messy looking pattern here. If we just zoom out on copper, you can trade this from your DeFi wallet over on Ostium. And so that's an Arbitrum native perp stacks. Really great. Love Ostium. Take a look at this though. All of this chop up here at resistance. So if we zoom out a little bit, this goes back to one of those old all-time highs in copper, but it's an important level of resistance. And we got what we call a false breakout. So if I just circle this, we got just like 2 sessions. There's the false breakout. So that false breakout is bearish. And if I just go ahead and remove those 2 drawn objects there, and then we zoom in a little bit, let's just zoom in. Okay, there we go. So notice the last time copper really got up here to resistance, it basically fell off a cliff and crashed. It's done that several times. So I would not be surprised to see copper move sharply lower, down to like $4.50 or something like that. I think that maybe it gets all the way down to trendline support at 430, but this looks like a really interesting short play in my opinion. And you can use zero leverage and pick up maybe 20 or 25% or so. That seems pretty darn attractive. So gold, silver, copper, I would prefer to be short all 3. I'm only short gold. Now here's ETH. And just checking back in with these digital assets, I think that they all move lower over the next couple of weeks here. Let's look at equity markets. Let's take a look at equities. Here's the S&P. So this compressing wedge here, it's eventually going to break either to the upside or to the downside. It's just a matter of time. And with Google's earnings earlier this evening, let's take a look at the NASDAQ. So the NASDAQ breaking this level of support there. Notice how similar this pattern looks from last year to this pattern playing out so far this year. So we had the double top the NASDAQ put in last year. And then if I throw down that 100-day moving average, when the NASDAQ broke the 100-day, it also broke trendline support. And that started the correction from last year, which turned out to be an amazing buying opportunity. But we've got something very similar playing out again. Here's that double top again, and here's the trendline support, and here's the break of this trendline support just during the session today. So let's check in with Google, because I think Google closed at like 327, 329 right now. Okay, so I mean, look, they reported monster numbers. Google really hit it out of the ballpark, but they also doubled their capex. So they're doubling the amount that they're spending this year on capital expenditures, right? And so it's like $200 billion almost that they're spending. It's a lot of money. And the market is starting to ask, well, hey, where's the beef? Like, how much are you spending and what type of return do you expect on that spend? And, look, Google's numbers have been nothing short of phenomenal. But the fact that they're not being rewarded for it and that investors suddenly care about capex, that is something to watch, because you take a look at the rest of the Mag 7, like Nvidia, at support today, just clinging to support. You take a look at Microsoft breaking down, gapping down on earnings. All of a sudden it matters, the capex. Apple's one standout. Apple is near all-time highs. Amazon reports tomorrow, and they're sitting near support, and that's also the 100-day moving average. A break in Amazon and a break in Google, and I think the NASDAQ moves sharply lower. Here's Meta. Meta, after reporting, gapped up and then just filled the gap from the last earnings report. So you see that? Let me just go ahead and circle this. This is the last earnings report. Well, here's the last earnings right there, and here's the earnings report before. Doesn't this look like a face or something? you get that. I don't know what type of pattern you call that, but that right there is that's the meta. That's the meta pattern, and I think it continues going lower. Take a look at Oracle. So Oracle here, that this has long-term trend line support. Let me go ahead and draw this in. So if we're going to talk about the theme of borrowing or leveraging cash flows to get a bigger piece of this AI investment trade, whatever it turns out to be, Oracle is kind of the poster child for that. And take a look at this pattern. So briefly, I think Larry Ellison was the wealthiest man in the world just because of this massive move from Oracle stock. But this is long-term support. So like if the NASDAQ actually starts to correct, don't you think that Oracle might break support? And if it breaks support, well, then we'd be talking about something down here, maybe like at 118. So that seems like it could be where Oracle goes if this level of trendline support doesn't hold. But what does that tell you about the state of like investor enthusiasm for leveraged exposure to AI data centers and all of that capital expenditure? I don't think that investors are all that bullish on the cash flows from that spend if you see the one company that's borrowing the most to get that bigger piece of that pie, its stock just get decimated. I mean, how far has Oracle fallen so far? It's like down 60% from those all-time highs. Just amazing, down 60%. And yet it could still move further to the downside. It could, at one point, maybe this year, be down 65% from its high last year. That would be an amazing collapse from a very, very large company. But hey, you know what? Maybe they've got the cash flows to be able to support it. I don't know. I don't think so. The last time I read that they were borrowing $100 billion this year and had just closed the first $50 billion tranche. That's on top of $30 billion borrowed last year. So that's why the stock is getting trounced. And it could just be a matter of time until even high flyers like Google, investors start to demand a higher ROI on that capex. I mean, take a look at this chart. This is straight up. This isn't even a parabola. This is just straight up. And that's Google, one of the largest businesses in the world. And hey, if they're not rewarded after reporting great numbers, then you know that suddenly the CapEx spend matters. I see maybe Google at 290. Alrighty, everyone. Thanks so much for joining this call live. Really appreciate you guys. And I will see you all tomorrow for the next daily market wrap.